Good afternoon everybody, this is Lara from Pure Elliott Wave with an extra free analysis for you today. This is Tesla. One of my members on my website, my membership website, asked me to do this. A couple of people on the YouTube channel asked me, and I own some of this myself, so I'm going to update it for my own purposes as well as yours. The weekly Elliott Wave count for Tesla expects it's in the early stages of a supercycle degree third wave up, with primary 1 and 2 within cycle wave 1 may be complete. I might need to move this up 1 degree. We'll see how this one unfolds. Let's zoom out and look at the whole structure of this. Overall, the bias is to the upside. And the other thing that I note that's really strong in this chart is this huge, strong V bottom down at the January 2023 low. Looks very much like what commodities do when they form long-term sustainable lows. So that leads me to expect, because of the look of this low, that January 2023 is likely to remain intact. And from this high to this low, it does subdivide really well as a zigzag. There's a leading expanding diagonal for A, a little zigzag for B, and a nice impulse for C. A and C are relatively close to equality in length. A is 207.64 and C is 212.85. C looks longer because of the scale. This chart's on a semi-log scale. When you consider whether or not waves are equal in length, you have to consider the arithmetic length. Don't apply a log function to it. So that's following a common behavior. So I think I'm happy with the wave count up to this point. I'm not so happy with this look here. Primary wave 1 has a deep time-consuming, well, relatively shallow, but a more time-consuming second wave and a more brief fourth wave. But then when I look at this chart of Tesla, it has some pretty high volatility, has a tendency to behave a little bit like commodities. And so with this V bottom, a commodity-like tendency, and a brief fourth wave compared to a more time-consuming second wave, it doesn't have the best look. But if this market has high volatility, making it behave like a commodity, then I would expect its fourth waves to be more brief than its counterpart second waves. I tried to see if I could see a 5-wave structure complete from this high to this low, and primary 2 just won't subdivide as a 5. The only structure it could be would be a leading diagonal, and I'll show you why that doesn't work. Let's subdivide A as a leading diagonal. It doesn't work because the wavelengths and the channel is wrong. You look at these numbers here. The first number is the price point. The second number in brackets is the distance of the wave from the high to the low. So note that minor wave 1 here is 86.93. Minor wave 3 is 84.91, so 3 is shorter than 1. And minor 5 is 81.88. 5 is shorter than 3. 3 is not the shortest, and the actionary waves 1, 3, and 5 are getting shorter in length. But now look at the reactionary waves. Minor 2 is 66.62. Minor 4 is 71.05999. 4 is longer than 2. So this diagonal can be neither contracting nor expanding. The actionary waves suggest it's contracting because they're getting shorter. The reactionary waves suggest it's expanding because they're getting longer, and the trend lines are diverging. So it doesn't meet the wave rules for a diagonal. It obviously cannot meet the wave rules for an impulse because there's just this massive overlap. So I'm considering that maybe primary wave 2 could be complete. And one of the reasons why I'm considering that is it's finding support around about the upper edge of this channel, which is an Elliott channel drawn about supercycle 2 from the start of A to the end of B with a copy on A. This upper trend line has shown around about where prices found support, although price is overshooting back into the channel. It's not a perfect look, but it's kind of close. So let's have a look and see what I've figured out for primary 2 on the daily time frame. This high here of primary 1 is this point up here. This is a high on 19th of July 2023. It won't subdivide as a single zigzag. It's really problematic as a double zigzag, but it has a decent fit as a triple zigzag. So that's what I'm going to label it as by a process of elimination. First zigzag, intermediate W. First and second joined by a 3 in the opposite direction labelled X. Second zigzag, intermediate Y, another X wave. Third zigzag, intermediate Z. This first zigzag subdivides quite nicely as three-wave zigzag. We could possibly see minor B over in here. You'd have to look at a lower time frame, but I'm going to see it over here. Let's get some labels in here. I'm just going to get some more labels in here just to see if this is going to be a decent fit. I think I'd want to put this here. Okay. Minor A looks like a decent impulse. Minor C looks like a really good impulse. Yep, that has a good fit. This minor A looks like a really good impulse. This minor B, I think this could be a double zigzag. I'll leave the labeling off there, but minor C, this looks like a really good impulse. So I'm really happy with that part of the wave count. This X wave looks like a pretty good zigzag. I think maybe this fourth wave is a triangle over there. Minor B, this looks like a very obvious zigzag. And minor C doesn't look that good. I think it might be an ending contracting diagonal with 1, 2, and 3, 4, 5 in here. Now this zigzag for minor Z, I think maybe I could actually pull A and B down here like that, and then minor A is going to have a better look as an impulse here. So that looks okay. I'm just a bit concerned at the brevity of minor B. This move from this high to this low absolutely could be an impulse and not a zigzag. Impulses and zigzags really can look very much the same. It's what degree you label the little corrections within them is going to tell you if it's a zigzag or an impulse. And because you can't be absolutely certain until the whole move is absolutely, obviously, definitely over, you're going to have to consider both. So it could be a zigzag here, but I'm going to do an alternate, and I'm going to consider what if that's wrong and what if it's an impulse and we've got a B wave to move higher. So I'd want to put this here. Now we can see that this movement down here could be a complete impulse. We could be seeing for a little bounce for a little B wave, and then we could be expecting new lows for C to move below the end of A. Could be about even in length with A, or it could be 0.618 or 0.382 the length of A. I want to see some technical support for the idea that primary wave 2 is over before I would have any confidence whatsoever in that. It's getting really close to the 0.618 Fibonacci ratio, and this is on an arithmetic scale. So you'd probably use an arithmetic scale for Tesla. I might toy with log scales though, and applying log functions to the Fibonacci retracements if it does have pretty insane volatility, but I'm not confident that I'm really sure about the level of volatility for this one before I did that. So I'm going to sit on the fence for the short-term picture. Do we have new lows for the end of primary 2? Or is it over, as this suggests? So let's look at technicals to see which of those two scenarios. Can we try and tease out which one's more likely? I don't think we can, and I'm going to have to sit on the fence. So if we can't, then what price point would we need to have passed? Well, unfortunately, it's all the way up here. This is it. Because within intermediate wave Z, the third zigzag in the triple, minor B may not move beyond the start of A below 265.13, so a new high above that point. It's a lot of confidence that primary 2 is over and a primary degree third wave would then be underway. That's a long way away. I'd use this channel in the first instance. It's a best fit channel. If we see a full green daily candlestick above and not touching this trend line in coming weeks or months, then I really would have a lot of confidence that primary wave 2 is indeed over. I might be pretty confident before we get to that point, because I wouldn't expect minor B to be too large. Look at the size of this minor B in this zigzag, and this one here, and this is there's no way you can see this as an impulse. It would not make any sense. So we can be pretty confident this is a zigzag. We can be pretty confident this is a zigzag. Look at the size of the B waves. They really aren't absolutely huge. So if minor B got, say, up to here, if that's the high, how high a bounce goes, then I'd probably say, no, that's probably unlikely, and we'd just go with this model. Okay, let's move to technicals. At the weekly time frame, the first thing I want to see is a bullish candlestick reversal pattern. This current week, we're only halfway through the week. Can't draw any conclusions here, but the last completed week is finding pretty strong support about 182. That is further off to the left of the chart, strong support, but it was kind of weakened here, so it's not that strong. Maybe we could possibly move it down to here and look at these lows here and expect we're probably going to get stronger support about 160 below. Volume is pushing price lower, but overall, as price is falling, its strongest volume is on an upward week, so I would read the larger long-term volume profile still as bullish for Tesla, and previous strong upward movement had really strong push from volume. So there was a lot of strength up off this low. So not only would you have a really strong V bottom back down here in January 2023, we've got two bullish reversal patterns on the weekly, and we've got really strong volume pushing price up off that low, which leads me to be reasonably confident, maybe about 80 to 90% confident, that this choppy overlapping downward movement is a huge counter trend movement and not necessarily the continuation of a bear market. I don't think we're going to see lows below January 2023, and that supports the Elliott Wave count. We could see further lows there, though, for the short term down to about 160, because support about 182 isn't that strong. The increase in volume for the last completed downward week, though, suggests that at least for the short term there may be a low in place there, and because the Elliott Wave structure is a triple zigzag and you can't continue with a fourth or fifth zigzag, 3 is the maximum number of corrective structures in a multiple. From an Elliott Wave perspective, that tells us that if the third zigzag is over, then the whole thing should be over. So either the third zigzag is over at last week's low, or it's going to be over sooner rather than later. ADX at the weekly time frame is below 15. It's too low to indicate a trend. RSI is neutral. Money flow is neutral. ATR showed a really strong increase up to the last high, and since then it's just been steadily declining. So volatility for Tesla is to the upside, and that's what I see in cryptocurrencies and some commodities. So it does have tendencies, using ATR as an indicator here, of commodity-like behavior, an interesting one. Technicals on the daily. Last time I analysed Tesla for you, I said that this head and shoulders pattern was going to have a downward breakout and the target was 183. The downward breakout happened and the low here was 194. The target wasn't quite met before price moved back up above the neckline. So that's done and dusted. At this high here, very strong bearish engulfing. At the low here, I think this could almost be a harami candlestick pattern. I'm going to put that in. Really not very common harami. This is a rather long body on this candlestick with a relatively much smaller body encased within it. I haven't seen many of these candlestick patterns, but this is a bullish reversal pattern, not the strongest, but it's a reasonable reversal pattern. So we do have some indication that there could be a low down here. Let's expect support about 182 may very well hold, but below that, if price breaks below this support, I'd expect support about 159, 160. At the low here though, there's also a selling climax. That's just a little piece of information that low could be sustained. At the daily time frame, ADX tells us there's a downward trend. The ADX line has just dipped above both the DX lines, and so now the trend is extreme, but it's not very extreme. When this market has a strong bullish run, ADX can get above 60, but it's never reached that extreme for a bearish movement. No divergence between price and RSI, but RSI has reached fairly deeply oversold, so I'd read that as bullish. Money flow is the most deeply oversold it's ever been in the price history of Tesla, so this is actually pretty bullish. So another small piece of information suggesting that if the low isn't in already in the last few days, then it's probably going to come sooner rather than later now. ATR showing a little bit of an increase at that low, so that's another feature typical of commodity-like behaviour. There is often a spike at sustained lows when they form V bottoms. So that's my conclusion for Tesla, either this or this. Possibly a little bit more likely to be this, the completion of a triple zigzag. And the other thing is Z has found support really, really close to the lower edge of this best fit channel. Now we could see lower lows, again, further support around the channel, like we saw nearly a test here and then price moved a little bit lower. We could see that happen again. It could have a little bit further down to go. But I think the low is either in here for the 25th of January 2024 or coming sooner rather than later. And that's it from me today with an extra free update for you. I'll be running a vote for extra free updates for other markets probably toward the end of this week.